Yeah, no, it was pretty good. And I think given some of the reports we've seen from their peers in recent weeks as they've reported, I don't think that expectations were very high for AMAT going into this print. And so the idea that they could come in and beat and actually guide pretty strongly versus others that have been guiding next quarter down pretty significantly, I think that was a positive surprise. And it looks to be the drivers are a few things. One is they've got a good amount of backlog. These are tools that they had orders for even like last year that they weren't able to ship because of supply constraints. And as that starts to ease, they're able to ship some of that. I think more importantly, though, is just their general business mix. They don't have nearly as much memory exposure as, for example, Lam Research does. And memory's quite weak. They're feeling that. They also have a very large amount of their volume in what's called trailing node capacity. So like leading edge is weak, but there's a lot of demand for older generation tools, and they sell a lot of that. They have their business segment, they call it ICAPS. It stands for Industrial Communications, Automotive, Power, and Sensors, ICAPS. All this trailing node stuff where the demand looks very, very strong, and it's actually making up the difference and offsetting the weakness that they're seeing in leading edge logic and foundry as well as in memory. And so you put all that together, their end market mix, their positioning and everything else, and they're able to outperform what their peers are doing right now.
That's right. So you're talking about an upside, further upside of 21% at $140 a piece. What are you pricing in for the stock to move higher from here?
Yeah, so we've got a downturn built into our numbers. I think most of the street does. I don't think that's unusual. So the question will be kind of like, when does it trough and everything else? But I mean, I do think that as you go through this, there should be a nice lift as we sort of return to a more of a growth trajectory as you get into 24. But for AMAT, I actually think that they see a little less impact of the current downturn. You can sort of imagine they've got a near-term trajectory that's being supported by this trailing node ICAPS business as well as the backlog. You get into next year and maybe that stuff's rolled up, but by next year, hopefully we're back into a growth scenario as well. So I think the cyclicality and everything should be reduced as well. But I think given that and the idea that you can sort of hopefully put a floor on where the trough is in an environment that is not great and look forward to growth going forward, I think this is reasonable to think that we can still see upside from the stock as we go from where we are now.